The strategy that I will teach you in today's video is trend following and price action based. I applied the trading strategy for many years and it proved its accuracy and efficiency. We will cover a real market example. I will teach you how to execute proper analysis first, and then at the end of the video I will teach you where should be your entry level, stop loss and target. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. First of all, the strategy is trend following. It signifies that if the market trend is bearish, we should only look for shorting, and if the market trend is bullish, we should look for buying. In order to identify the market trend, we will apply daily time frame. Daily time frame should be the first time frame that you analyze. Here in European pair, the market is bearish. The market is trading in a bearish trend. Why? Because over time, the market keeps setting new lower lows and lower highs. The trend on European is bearish. It signifies that on European we will only look for shorting. And in order to short the market, we should identify the safe points, the safe zones to sell from. In order to do that, we should analyze the key levels and we should identify the strongest resistances. Our first strong resistance is, of course, right here. You can see that it was a very strong support, and after the breakout, definitely it turned into a very strong resistance. Bit higher over here we have one more strong resistance, and here we have a very important horizontal zone of supply. So we spotted these three resistances, and from these resistances we will look for trend following trades, and our task is to patiently wait for the test of one of these resistances. And remember, traders, that if the trend is bullish, the logic will be the opposite. In a bullish trend, we will only look for buying, and we will look for buying from the key supports. Traders, last day of sale. Until tomorrow, you can get a lifetime access to my premium group with a 40% discount. Inside, you will get the access to my daily live streams. You will get my ebook and video course. And as a bonus, you will get the lifetime access to my VIP signals group. For more info, check my website. It is vasilychatry.com/private group, or text me in one of the social networks. I will give you more details. Don't miss your chance, traders. Back to Europeans. We spotted that the market is bearish and we identified our key resistances to short from. We can see that the market just tested a very important horizontal structure. And once you see the test of structure, you should make a prediction. The thing is, traders, that trading in a bearish trend from a key resistance, we should expect a trend following movement. And the market should drop at least to the closest strong support. So here in our example, from that resistance, we can anticipate a bearish movement at least to that horizontal support. After we made the prediction, we won't short the market from that structure. We will look for confirmation. We will analyze the intraday time frames, and there we will look for bearish confirmations. And the time frames that we will analyze will be the 4-hour and 1-hour. Opening a 4-hour time frame, you should execute the comprehensive price action analysis. Here, analyzing the 4-hour time frame, analyzing the lows and the highs, first of all, we can spot that the pair is steadily falling within this channel. You can see that the price perfectly respects the boundaries of the channel, and you can see that our horizontal resistance that we spotted on a daily matches perfectly with that trend line. And now that trend line and our horizontal structure compose a very strong intraday supply cluster, the cluster based on the daily and intraday structure. Analyzing the reaction of the price to that, we can see that here the market was testing that structure, and you can see that from here we saw a very strong rejection. By the rejection, I mean that the wicks of these two candles are bigger than their bodies. It signifies a very strong bearish pressure from that area. It signifies that that structure right here is important for the market participants. And for that reason, once the price bounced, you can see that sellers managed to push the prices much lower. So now let's check for more clues on an hourly time frame. Once you open an hourly time frame, you start analyzing the price action one more time. And here we can spot how the price acted after a breakout of a key structure. Here was our daily structure that was broken. And after the breakout, the market became exhausted. And we can spot that the market started a correctional movement within that expanding wedge pattern. Then take a look what happened. The market reached our zone of supply, and testing that zone, the price formed a double top pattern, classic bearish pattern. And after two tests of our supply zone, you can see that the price dropped heavily. And you can see that with that bearish candle, the price violated the support of the wedge and also the neckline of that double top pattern. Why is it so important? Because that rising trend line was the resort for buyers to buy from. We saw strong bullish reactions from that trend line, and definitely that trend line was important for the buyers. However, the violation of that by the bears is the sign of strength of the sellers, and that is what we need to confirm the strength of the sellers and to confirm that with a very high probability the market will keep falling. So the point is, traders, that we analyze three time frames: daily, 4-hour, and 1-hour. And the price action on all these time frames should be bearish. And more bearish patterns, more bearish clues, more bearish confirmations we see among these time frames, higher will be the probability that the market will act as we predicted. But how exactly we short the market once we spotted the confirmations? We will open the trade on the lowest time frame that we analyzed, on an hourly time frame. And our trade here will primarily be based on the price action analysis that we executed. The price action within the wedge pattern represents the correctional movement after a breakout of a key daily structure. And within that correctional movement, the most important points for us are, of course, the highs within that correctional movement, because once the market reached that highs, from this highs the market started to fall. So the first thing to note right here is our stop loss should strictly lie above this highs, because it feels like the selling orders of big players were lying exactly based on this highs. Now about the entry point. So as we discussed, the support of the wedge was the resort for the buyers to buy from. And of course, after the breakout, that rising trend line that was the vertical support turned into a strong resistance. So from that trend line, we can look for shorting. And by the way, on Friday, we already shorted the market on a retest of that broken trend line with my students. So your stop loss is above the highs of the correctional movement. Your entry is the retest of a broken trend line of that wedge pattern. Where is the target? As you remember, on a daily time frame, we made the prediction that the market will keep falling to the closest key daily structure support. Our key daily structure support is right here. So based on that structure will be the target for our trade. What I like about this trade is that here we are trading with the trend. It is the trend following trade. We are trading from a key daily structure resistance, and we have very solid intraday confirmations. So the accuracy of that setup will be phenomenally high. And on Monday, I want you to join this movement and let's hope that the price will drop to our target. As always, traders, let me know in the comment section if you have any questions. Also, do not forget about big sale last day, 40% off, the link in the description below. Also, traders, please like this video, subscribe to my YouTube channel, and I will see you soon. Thank you so much for watching.